Okay,
we're using their spare labor.
Exactly.
I'm
okay.
assuming, that might make an ass out of you. I mean, I'm pretty sure the Bay Area stats.
Well,
would
what
track
happens when
the
you
same
say,
way.
I presume? Then you make a...
Presume instead of assume?
Yeah. Welcome to the Best of Investing. I'm Edward Brown, your host. Here's our format. A bunch of guys sitting around a bar. There's no bar. Having drinks. There's no drinks either. But we're talking business, and you, the audience, are listening in. The Best of Investing is actually a radio show that has been around since August 2010, and it airs every Saturday on Fox News Radio, 9:10 a.m. at 1 p.m. Now, we're not a political show. We're strictly business, so everyone will be happy with that. Remember, I'm Edward Brown, wishing you the best of investing. Are you ready? Let's go. Best of Investing. I'm Edward Brown, your host, along with my famous co-hosts, Mark Humph of Pacific Private Money and Lou Botmal of LPL Financial. It's a trivia question. Name the recent movie which starred superheroes, one of which turned invisible and included one who looked like a big rock. And Mark, you know the answer.
Well, Lou thought it was the Magnificent Seven.
That's before your time, too.
Fantastic Four.
Fantastic Four.
Which is really only Fantastic One, which was Jessica
Alba. Oh, Jessica Alba. Oh, she looked beautiful in that movie. Yes. Okay, we're going to cut right into email time here. And Mark, we received an email that asked, if I get on your mailing list, how long until you call me with a deal? And I remember that a couple weeks ago we were talking about people getting on your mailing list for investments for trust deeds. So why don't you get into that?
Right, so that investor or that question came from someone who listened to me speak previously about our company. We serve two clients. One is we make real estate loans to real estate investors because the banks have largely left that market. And those loans are funded by private individuals. These are just regular individuals who live in the Bay Area that oftentimes they invest in these loans that we make through their IRA or their other savings. Self-directed IRA money is a common source for funds for privately funded real estate loans. And so we were talking on one of the shows about how people can get on our distribution list of funding opportunities, as we call it, so that they can see what kind of loans we're doing and make a determination of whether or not they're interested in potentially investing some of their hard-earned savings in one of those notes. And the reason why they would consider doing that is because we pay our investors between 8 and 10% interest, annualized interest.
That's pretty good.
On their savings. Well, it is. We're talking about a zero interest rate environment, and where there's just nothing to be made in savings. And yes, stocks can be great, and there are other obviously, very liquid, traded investments. And Lou, of course, is in that industry and knows of several. We've talked about those in past shows. But if you're looking at having a diversified portfolio of investments, and if you're looking for opportunities to invest or to boost the yield that you earn overall in your investment portfolio, one excellent way of doing that is to consider what is referred to as trust deed investments, or also called private lending, funding a loan that is a bank-like loan secured by real estate with title insurance and hazard insurance and all the same kinds of security provisions that you would find in a bank loan. And this is a great way for individuals to participate in the financing world and earn high interest.
Yeah, the clients basically get to be the bank. So
right. So when people call my office or send me an email or go to our website and subscribe to get on, the question often is well, when am I going to start receiving opportunities? And that's actually kind of the good news, bad news of the business. The good news is that you can make great returns using your savings. The not so great news is that you and a lot of other people are starting to notice this opportunity, particularly because savings rates are so crappy right now.
You get some competition there.
Right. So sometimes people will call me, and it might be a while before I can send you something. So my recommendation to people who are new to our company, they might not be new to private lending. They may have done this before, but they're new to our company. Is the squeaky wheel gets the grease. It really does. You laugh, but it's
Did you
funny.
just make up that term?
But,
Is this car talk?
I have lenders that call me literally if not once a week, sometimes twice a week, saying, "Hey, I'm sitting on this money. What do you got? You
But
have
part of
anything
it
good
too
that you're underwriting?"
it depends on what interest rate they demand. I mean, some clients are still living 5-10 years ago when the interest rates were higher and saying, well, "Don't show me anything until it's 12%."
Well, long-time private lenders, those of you out there listening who've invested in a private loan before may recall, hey, I got 11-12% on my money. That was great. Well, it was great when interest rates were, 6-8%, but now interest rates are not. They're much, much lower than that. So the demand for capital right now is still strong, but I'm getting more and more requests from really strong borrowers who don't want to pay double-digit rates for the money they borrow from us. They want a note rate of, say, 9. So if they get a note rate of 9, and we're paying our investor 8, but it's still a well-secured loan and a good borrower, that's a great return. So that is true. So if you have money and you've invested in trust deeds before, and you're looking at maybe getting back into it again, keep in mind that we're generally not seeing 11 and 12% returns, but we're certainly seeing note rates of 9 and 10%.
Let me ask you a question. What would happen if some listener out there called you and said, I want to get my money working right away, and I'm willing to take, let's say, 6%. Do you think that you'd be able to provide a loan?
This week, for example, I'm working on 3 loan applications that are very, very low loan to value, below 50% loan to value. I don't see a lot of loan requests like that. And they're, I think I'm working on 3 of them right now, and all 3 of them are nice properties, decent properties, and they don't want to pay more than 8%. So my struggle is I don't have enough lenders who will actually make their money available at, say, 6 or 7, because I need to service that loan. So if I make a note for 8%, I can't pay my investor 8%. Otherwise, I don't.
Otherwise, you're in this for your health and not to make a profit. Where are those properties located?
Well, one is a nicely remodeled commercial office building in Oakland. There's another luxury condo, as it's called, but it's really just a really nice condo in Benicia on the water with nice views. And some people are a little bit skittish on condo loans, and there's various reasons why, which I'm not going to get into that for you.
Lou, we have an email that we received for you that says, why do bond prices drop when interest rates rise?
That's a great question.
That always confused me.
Bonds, whoever learns about bonds in business school or even investing class, they always go, well, bonds have an inverse relationship to everything else. When other things are going up, it goes down, and vice versa. But let me explain it kind of in a simplistic manner. That is that bonds are a popularity contest. Like Mark was just talking about the difference about interest rates in your business and difference between 10 or 8 or 6%. Realistically, that's what's happening with bonds. So right now, there could be bonds out there that are paying, let's say, 3.5% or 4% in this environment. It could be a corporate bond with a very reputable company. Call them an S&P 500 or even a Dow 30 company. And then all of a sudden, interest rates change. Again, not forecasted to occur until 2015, according to the Fed, on a Treasury side. But on a corporate side, let's say bond interest rates start going to 5.5% or 6%. Well, at that point, what occurs is the people holding the current paper at 3.5% are faced with new bonds that pay a higher interest rate. So your bonds are now worth as much as those bonds. It's the same company.
Really. Nope.
It's the same company, same financials, higher interest rate. And everyone's like, oh.
Yeah, because the interest rate doesn't change on the bond that those people
right,
purchase.
You already own it. It's a fixed investment. That's the problem. So people don't understand when they get into bond investing. One of the big things I talk about is liquidity. If you own current bonds, maybe you can't trade them. I tried trading a bond yesterday. It has a 30-day call provision on it. What's a 30-day call provision? Well, any 30-day period, this company can pull the bond in and pay it off. With that, it never trades at par value. It always trades at a discount because it could get called. So there's certain things that can affect bonds, and interest rates being the main characteristic where people go, gee, if I get a higher interest rate today, my low-yielding, low-paying bond isn't worth as much money. That's how it affects bond funds. Bond funds can hold stuff that's very short, under a year, or can hold stuff that goes out 7 to 15 years. Well, if bond interest rates change today and start going up, that affects the value of the bonds in the current portfolio That's why the bond fund would go down.
Well, yeah,
too.
it depends also how much money gets poured in to, interest rates go up, new money comes in,
Right.
buys higher priced bond or higher interest rate
interest rate bonds, yes,
Yeah.
yeah. And then you all of a sudden you're sitting there swimming in a, I always tell people there's 3 homes that are exactly the same and they're all rented to 3 different people. What drives the value of those homes? The chances are who they're rented to. Are they rented to government employees, a bunch of college kids, or some people that pay the rent late every month? Well, those homes aren't worth the same thing based on the tenants.
That's
kind
an
of
interesting analogy.
That's
You
kind
made
of
that one up? I like
made that one up. That's kind of a way to look at bond. I tell that to people about in the Bay Area about bond investing because they get it because everyone understands real estate so well. And I'm like,
It's the same thing about commercial property. You have 3 identical office buildings, and you've got tenants in there, and one tenant's paying $1 a square foot, and then the one next door they're paying 50 cents a square foot. You can't sell those buildings for the same price.
Absolutely not. Especially if you have long-term leases tied up.
Yep, the
Rent con-
value is based on the rental income.
Yeah, rent control kills that market.
Okay,
So,
well, I'm
yeah.
sure listeners are going to have a lot more questions about bond.
I'd love to talk to people, just general questions. I don't charge anything to talk, and just people call all the time or email with different questions.
Pick your brain.
Right.
Okay. And here is our third and final commercial break trivia question. Name this movie where a 9-year-old boy says, "I see dead people." Welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hanf of Pacific Private Money and Lou Bothall of LBL Financial. When we get to the third final trivia question commercial break, this was the question. Name this movie where a 9-year-old boy says, "I see dead people." What's the name of that movie?
The Sixth Sense.
The Sixth Sense. Very
We
good.
were waiting for the answer to be 7. We were talking about that horrible movie with
Oh, yeah, exactly.
Morgan Freeman, yeah,
Yes.
very scary, disturbing movie.
Yes.
Oh well.
Okay, Lou, speaking of disturbing, you've got some.
Oh, great. Thanks for that lead in.
statistics.
Great segue, as they like to say on the radio all the time. Wow. Let me go jump out the window. My
Disturbing
goodness.
economic news, we have Lou.
Obviously, it's been a pretty rough week. Thanks for bringing that up again. I wanted to go through this example very quickly because it's all in a return, I say, and I did some math of my own. And, people skew statistics all the time. And let's just go over something here real quick. Everyone's thinking about a good year economically, a good year in the S&P 500. Let's trace back a few things. You got to remember in 2011 was actually kind of a rough year. It ended very bad because of that debt ceiling debate that we had, and Congress had a virtual deadlock. So let's look at a measurement here. In April of 2011, which was a high in 2011, the S&P index rose to a near high around 1363. All right, so when I did this math this week on Tuesday, the market was down and hit a level around 1419. I think today was around 1415 when I came up here at the end of business. So right around the same level. So that's almost 18 months apart and 56 points of return on the S&P 500. It's just one index out of many. And I love my stats teacher because they always say there's devil in the details. Because the other way to say it, the 4.2% rate of return, what's that really mean? Because a lot of people are out there.
4.2 divided by 18 months, or actually divided by 1.5 is 2.8%.
Yes, well, everyone's jumping up and down saying we've seen a 12, 14, 16% rate of return this year, right?
This
On
year.
This
yeah, exactly.
year,
So
yeah.
that's how the statistics get skewed a little
Because
bit.
who invests on a calendar year? Nobody.
Right. That's just the measurement everyone
Well, if
uses.
you took, March 13th of, they specifically pick a specific date to say which one they want the best, right?
Yeah,
Not
no,
like baseball stats where they say, well, in the last 13 games he's hitting
Yeah, 13 games, yeah.
But what's he done this year?
Well, the show's named The Best Investing, and Lou, this isn't the best investing idea, so let's talk about it real quick. And I did another parallel there. Everyone knows about bank investing, right? Not investing in banks, but if you leave your money in a banking institution. So let's say you take $1,000 and invest $1,000 a year, okay, for a 10-year period.
All right.
Start with a very low interest rate, maybe 1% in the bank, right?
Okay.
At the end of 10 years, with those investments, you'd have $11,671.
That's correct.
You earned about $671 in interest and compounding over that time frame.
Yep.
Right? Okay. So now let's take the same example because everyone's talking about a very low return for the market over the next, possible 3 to 5 years with all the problems of paying down our debt. And let's use 4.2%. Wonder where I got that number. And at the end of 10 years, you'd have $14,136. 3,136 was compounding. So you see the difference of just earning a little bit more and what this does over time. And this is what really the factor of dividends plays in, because dividends, on average, in the S&P 500 pay about 1.6, 1.8% depending on when you buy the index. So that's if you get 4.2%, you get another 1.8 of dividends. It's about 6. That takes these numbers and expands them
Okay, so that's
exponentially.
on top of it.
Right, that's on top of it. Yeah. So I mean,
that's good.
even if you're getting 5%, it's a lot of rate of return compared to what you can do with your money otherwise.
Yeah.
That's my point. So you still should invest. That's all.
Okay, I like that, and especially for dividends.
One
Yes.
more reason to consider strongly in your investment portfolio trustee secured notes
Yes.
paying, even if they paid 6%, as you suggested earlier, but most of ours
Yeah.
are paying 8%, sometimes more, and interest only. Again, it's just, all joking aside, one of the biggest problems that we're all facing right now is and we're of that age of, we're baby boomers and we're looking toward retirement and retiring successfully. Whatever that means is different for everyone, but
Depends on your standard of
in
living.
this low interest rate environment that we're witnessing now and that we're likely to be in for another several more years, and the stock market, which is, as you said, maybe based on future economic outlook is maybe not going to perform all that great over the next 3 to 5 years. What do people do to boost the yield in their savings?
Because everything's based on alternatives.
Absolutely.
Right?
Absolutely.
If you don't invest
So-
in one thing, you invest in something else.
which
Right.
is why, certainly self-directed retirement accounts, self-directed IRAs are becoming more and more popular as people decide, look, I need to take charge of my retirement savings and look at other alternative investment options, like maybe buying real estate in your IRA or investing in real estate secured notes or other forms, whether it is even gold or whatever it is you believe will help boost the return.
Well, the
But-
first thing that people should do is if their employer has any kind of 401k where they do any kind of matching, that's guaranteed money.
I get so upset about that because I had an argument this week with somebody. I stopped funding my 401k. Why?
Why?
Well, it's not going anywhere. I'm like,
even
you
if it's-
just missed the matching. You missed the deduction.
Absolutely.
Yeah.
$5,000,
Yeah.
and you paid the government $2,500 for nothing.
Yeah.
You have $2,500 in your pocket, which you spent on coffee this year, and by and large, you don't have any more money in your savings
well,
account.
my whole thing is just the fact that if you have a kind of plan where the employer does some matching, where let's say you put in 6%, they put in 3%, that's a 50% return on your money, even if you invested at 0%.
Right.
Yeah,
And people just
exactly.
forget that. It's the simplest tool around.
And you like your real estate statistics. What was the one that you just had from the article?
Well, it's. I brought in an article about home construction. It's actually, we talk a lot about real estate and the real estate market on this show, and we've had a tight real estate market, meaning there's not a lot of inventory out there. So what happens? Well, that gets the home builders excited, and so the stats came out for the previous month, September, and apparently we have had a surge of new construction. It's up 38% year over year, so that's pretty significant. Now, before you get too excited, we're still at a fraction of the rate of homes we were building in 2007, but hey, it's going in the right direction.
There you go. All right, thoughts for the day here. 96% of the U.S. population lives within 20 miles of a Walmart. Pretty amazing. And believe it or not, there's a city in Alaska named Unalaska. Now, if they hate Alaska that much, why don't they just move? Don't name the city Unalaska. Welcome. You're listening to the Best of Investing on News Talk 910. You know our show. It's where we present valuable information about real estate, the financial markets, and other economic business of the day. For those of you listening for the first time, here's our format. A few guys sitting around a bar having drinks without the drinks, talking business with you, the audience listening in. I'm your host, Edward Brown, and I'm pleased to have as my co-host Mark Hanf of Pacific Private Money, California's fastest growing private lender, and Robert Schiff of RPM Mortgage, California's best mortgage broker.
Thank you.
That's in our humble opinion, of course. And today's trivia theme is scary movies. I figured we just finished Halloween, so why not?
Okay.
Our website is bestofinvesting.com. Check us out on Facebook and YouTube by typing Best of Investing Radio Show. And you can also record us in the future on a website called dar.fm. And we're also on television, Comcast Channel 26 on Saturdays at noon and Sundays at 6 p.m.
We're everywhere.
Or everywhere. We are everywhere. Speaking of everywhere,
we need the best of investing blimp next.
yeah, that's right. And speaking of all
anybody
of that,
go to the parade
that's
on Wednesday?
Well, I went, but was on my couch watching it on TV.
I was going to say I paraded around my living room watching it.
Did you go?
No, I didn't go. And I watched virtually every Giants game they played, after the break, which is when I start to get excited after the All-Star break,
Sure.
and watched every playoff game, of course. But I just, the parade doesn't do anything for me.
either.
My high school
Really?
daughter went, and she didn't watch a game the whole year. But for her, it was just an event to go to that had tons of people, and it was something.
Just an uplifting event parade.
The last
all that,
parade I
yeah.
went to was when the 49ers won their first Super Bowl in 1981.
Yeah.
I was in San Francisco then, and that was
crazy.
That was insane.
That was
I hated
crazy.
it. It was horrible. It was
Yeah.
just it was scary. There were gangbangers. I mean, it was all kinds of crazy stuff going on.
Well, I had heard
And they were so set to keep this clean. It's Halloween in San Francisco. I mean,
yeah.
they let it be known this was family affair, and you have a can in your hand, you go to the can.
Oh, brother. Robert. I tell you. Well, also I'd heard that because of the way that they had the stages and all that, you couldn't see the players unless you were the third person from the
Right. So
from
if you
the
go with
front.
binoculars, I mean, you must
Yeah.
be watching it on TV.
I mean, when I go to the game, I actually
Yeah.
get to see the players
Right,
there.
exactly.
So
Oh,
what do I
yes,
need to
yeah,
see them?
yeah.
But
But I did like some of their speeches, and I liked Romo's T-shirt.
I know his was funny. What I may look illegal.
Yeah, yeah.
That's great. I love that. All right, guys. Well, let's talk a little bit real estate. Mark, you were mentioning before we went on the show about some of the commercial loans that are going on, or just in general.
Well, we got you had brought in an article about commercial, a renowned hard money lender who focuses on commercial lending was talking about, basically in a newsletter to his clientele that, if you're interested in high quality, privately funded commercial loans, you ought to start looking now because, we may be at a peak in terms of the quality of those loans, and so
Yeah, they're disappearing.
yeah, they are, and so what's interesting is my company Pacific Private Money, we do privately funded, also called hard money loans, and we've been doing them for the last 5 years in the Bay Area, and we have seen in the last couple of years the highest quality borrower. Hard money 10 years ago used to be distressed borrowers and stories of woe, and you were just making a hard money loan, and they called it hard money because you were really just lending on the asset. You just you didn't care who showed up to sign the loan documents. It was really you were making in those days was mostly seconds, but the last several years, most of the privately funded hard money loans have been first position loans, and some of the borrowers have been stellar in terms of credit and strength, and that's because the banks stopped lending.
That's right. It reminds me of the S&L crisis in the early mid-'90s.
Yeah.
That was a really, really good time to be in the hard money loan business.
So
but,
this
but
guy,
why would it be harder now? I would think that the real estate market is certainly has a stronger base than it did a year or 2 years ago.
Like regulations, right?
Commercial also probably.
well, the tone of the article was, if you want to take advantage of the high yields that you can earn as an investor in one of these real estate secured commercial notes, now is the time to look because the banks are starting to lend again, and they're starting to come back into the woodwork, and so those of us who are in the realm of private lending, we're starting to see less and less of those, A paper or Alt-A papers, they used to call it, the stated income with but high FICO scores. We're seeing fewer and fewer of those lenders now because there are some banks are starting to come back into it, and not so much in a big way yet, but
Well, not
on
only
the commercial
banks,
side
though,
they certainly are.
But also, if you think about Wall Street, if us hard money or the hard money lenders are making good profits, and Wall Street trying to figure out where to invest, and if real estate's starting to come back, I mean, it's a great place for them to invest, and that's where they're going to be snapping up a lot of these loans.
And that has, RPM has it took a couple of years after the upheaval in '08, but RPM finally secured lines of credit on Wall Street so that they could go allow people to get jumbo loans, where the source originally had been Wall Street and they clamped down. They're starting, like you say, to loosen up again, and they realize that's a really good rate of return for the security.
So in hard money, we're seeing we've been enjoying for the last several years, high quality borrowers and high quality real estate. So the people who fund those loans have been getting a good deal. But I guess for someone like me who has that business model of hard money lending, we're kind of at the peak right now, and I'm looking ahead going, 2 years from now I'm going to be looking back at the good old days of, A-paper, high FICO borrowers, because I'm probably going to be, really at that point dealing mostly with people who have either scarred credit or are in situations where still the banks won't consider them.
And that's probably a function of the bottom of the market being past us and the values going up, or?
I think it is. I mean, I think clearly, if you asked me, when was the bottom of the real estate market in the Bay Area, I would say the fourth quarter of 2011. I mean, literally a year ago, because I remember a year ago at this time was it was the trough. It was still tough to sell. And people were wondering, looking ahead to 2012, well, is 12 going to be the year that we stabilize, or is it going to be another year like 2011, which was very disappointing for people who were trying to sell real estate? And
yet still, when I have people coming in to purchase or even a refinance, sometimes, and it's not all the time, but it's not infrequent, that the loan becomes problematic because down the street there was a short sale or a foreclosure, which puts an incredible damper on the appraised value of their property. So they have a house that they think is worth $750, and there may be one down the street selling for $750, but there's one down the street the other way where it was a distressed sale or foreclosure and it got sold for $500.
So how does the appraiser deal with that?
oftentimes they don't, and that's the problem. So here we're in a stabilizing market where in there was an article this week about San Francisco is up 5% year over year. So we've had a recovery. Well, I don't know if I want to call it a recovery. Let's call it a stabilization. It doesn't seem like we're going down anymore, and if anything, it looks like we're inching up a little bit, mostly due to lack of inventory, meaning there's not as many houses to buy on the market today as there were a year ago today. But Robert, your point is that still, if you're trying to refinance your house or even buy a home, and let's say you're buying a home and there are multiple offers, and the home was listed at $500,000, but it got bid up to $600,000. Now you go for bank financing and they order an appraisal, and the appraiser is trying to achieve that value, but oops, right down the street there was that short sale for $450, and that does drag it down. So it really is. It's still the market's still messed up. I guess that's the the point.
Yeah.
We're nowhere near really at any
well, we hear
strong recovery. I guess
we hear more and more that more and more people are saying that the economy won't really recover until the housing market finds a stabilization and a base, and we're not there yet.
And that's a function really of what? Jobs, right? In the job market.
Also, the banks are still, with that shadow inventory, and how much.
Well, that's still always a question. Yeah. Are they going to? When are they going to? How are they going to? I mean, there's clearly
there's certainly the programs in California with all the money that the bank's supposedly holding to go out to people and agree to refinance and lower the interest rate and even reduce the principal, and that would take potentially non-performing loans and keep them performing, but there's still all the non-performing loans, 20%.
Well, what about the ones that they had already foreclosed on?
Yeah.
Okay, guys, we're going to cut to a commercial break, and here is the first trivia question. Again, the theme is scary movies. Yes. Now, this one's not actually scary, but it was when I was a kid.
Abbott and Costello meet Frankenstein.
Oh, man. Okay, now I got to do Abbott and Costello meet the Bride of Frankenstein. Okay, what was the name of the Hunchback of Notre Dame? The first three callers with the correct answer.
That wasn't his name?
Hunchback. His first name was Hunch. His last name was Back. No. What was the name of the Hunchback of Notre Dame? Right. The first three callers, and if I remember correctly, it's a one-person name like Cher, What was the...
You're sharing with us.
Yeah, thank you. And we'll be right back. Welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hoff of Pacific Private Money and Robert Schiff of RPM Mortgage. When we cut to the first commercial break, we asked this trivia question. What was the name of the Hunchback of Notre Dame? And Robert, what was your answer?
I forget. Cherie.
Cherie, no.
Well, it's you said
No, you
one
said
name.
Lon Chaney.
It wasn't Lon. It wasn't Lon.
Lon, as in Lon Chaney,
Lon,
but he
yes.
did play him.
Yeah.
It was Quasimodo.
Quasimodo, that's right. The guy from Japan,
So-
Quasimodo.
That's right.
That's right. Okay. There's another article here from, or regarding, as Mark puts it, Warren Buffett.
Warren Buffett,
Buffett.
or also known as Warren Buffett, Jimmy's brother,
Yeah.
just made a huge bet on the U.S. housing market, and what he's doing apparently is buying up real estate brokerages, and in fact, he's coming out with his own branded, based on his company named Berkshire Hathaways, which I guess is going to be it looks like it's going to be a division of Prudential. So, obviously there's somebody that thinks we've turned the tide, and of course, what was about 6 months ago, he talked about, if it were
For
him,
possible, yeah,
he'd be
buy a
buying up
bunch of
all the
houses.
real estate, all the
Yeah.
houses, and so. But I just find that interesting. Obviously, he believes that the transactional market is going to be healthy, and
Yeah, because he's actually buying up the brokerages.
Right, the brokerages,
rather
not
than-
real estate.
Not real estate.
He's buying up the brokerages, or he's investing in his own. I couldn't be clear.
Well, but it doesn't sound like he's buying the houses, though.
No,
so
he's,
at least
no,
he thinks
he's
there's going
buying
to be
real estate.
activity.
So he's
right?
he's heavily invested in Wells Fargo, and Wells Fargo is the biggest mortgage lender, at least in the entire western United States.
Okay, so at least he thinks there's going to be a lot of
A
transactions.
lot of transactions, and apparently a healthy market if he's investing in a bank that's the biggest mortgage lender.
Yeah.
And
well, apparently their combined network will be more than 53,000 agents under that under the.
He's going to be a big
the new-
babysitter.
the
he,
new-
he
yeah, the
also
new-
has several subsidiaries
Yeah.
that are banks that buy up loans on commercial properties that are in distress, planning to either take them over and restructure them and sell them or keep them. So he's really
But is he going to the banks directly and buying them?
he is the bank. He's becoming the bank on those commercial properties.
But I mean, how's he getting the loans?
Berkshire Hathaway has a facility of borrowing from themselves. They have a lot of cash in hand.
Oh, are they originating loans?
No, they're
Okay.
they're going to for instance, there's a commercial property I was involved with, and people that were, and they had bought it for $8 million. There was a $6 million mortgage on it. It was in Las Vegas, and its current value is about $2 million. And the bank was going to foreclose on it. What were they going to do? He came into the bank that had $6 million, said, instead of foreclosing, why don't I take over the mortgage, but I'm going to only pay you $1.7 million for it. And then it's off your books, it's a loss, you can write it off, you don't have to have reserves.
Yeah.
We'll go on, and the people will be foreclosed out, and so now he owns a property that's has a.
Well, he bought the loan. He doesn't own the property.
Well, he
But-
does, because he foreclosed on
Oh,
it.
did he foreclose on it?
Yeah, yeah.
Okay.
Or his another model was he went to the current owners and said, you can either deed it over to me, or if you want to stay, I'll give you 10 cents on the dollar and you can stay, and you can't, you're an inactive partner, and if we ever sell it, it's sort of like the movies, it's the guys that produce Godfather, they're waiting for it to make money to pay all the investors, so.
So what does this mean for real estate in California, real estate in the Bay Area?
Well,
Who
Warren
knows?
Buffett, isn't real loose with his money, and he's a pretty astute investor
Yeah.
in terms of what he does, and it's long term. So
And, yeah, and it wasn't so much California, right? It was
it's
Oregon.
Oregon and Connecticut.
Okay, so maybe that's where he thinks that there's going to be a big push.
Hmm.
In fact, let's go right to this, because Mark, this kind of feeds in a little bit well, here's an email that
Okay.
we received for you. It says, I've heard you talk about making short-term loans to flippers, but do you make longer-term loans?
Oh, good question. Yeah, we do talk about a lot on the show about hard money, privately funded hard money loans, and that how many of the borrowers of those are willing to pay higher rates, like 10, 11, maybe even 12% for the use of that money for short terms, because they're buying, fixing, and flipping distressed real estate. Maybe they're buying from banks or they're doing short sales, but that's been probably 60 to 70% of our loan activity the last 2 years at Pacific Private Money has been making loans, short-term loans, usually a year or less, to real estate investors who are buying, fixing, and flipping. So the email asked, do we make longer-term loans? The answer is yes, we do. We absolutely do. And again, we're generally making longer term loans, and longer term in the hard money world would be like 2 years, 3 years, maybe 4 or 5, but generally I
no
don't.
more than 5.
Yeah, generally no more than that, and on those longer term loans, we can generally get better than the short term loan interest rate. So in other words, a flipper might have to pay 10 to 12% for the short term use of money, but someone borrowing longer term, depending on the situation, depending on their borrower profile and what's the loan to value. We've been doing a number of loans recently in the single digits, so 9.9, which still for all intents and purposes is 10, but it feels like 9, or even 8.9.
It tastes like chicken.
So 8.9 to 9.9 rates on maybe 24 or 36-month loans on income property or commercial property, or maybe it's a duplex or triplex, something like that. So yeah, we are doing longer term loans, and again, the reason why someone would borrow at that price is because the banks still really aren't, for many people. They are for some, and again, they're slowly but surely kind of coming back in the realm. Now, of course, personally, since I'm in the business of making hard money loans, I don't want the banks to come back too fast.
Yeah.
So, but and again, hey, I'm trying to do a little radio here.
You're be un-American.
Right, yeah, I don't want to be un-American about this. The banks will come back. But let's face it, the banks are not going to be lending like they did in 2005, probably again in our lifetimes.
Probably not.
Probably
too
not.
much regulation.
And even today, when they are lending, they're not lending on some smaller, there might be 3 or 4 residential units with some commercial units down below, and it's just things that are problematic that they might not want to handle.
Right. Nor are they going to make loans on stated income, I think, the way they did in '05. I think you're going to need to be able to prove via W-2 or your tax returns that you're making the kind of income that demonstrates your ability to afford that particular loan. Even on rental property where you have rents paying for the loan, they still want to know that you have means today, and that's trouble. That's hard to do for a lot of Bay Area real estate investors, because I've seen a lot of tax returns, and it's amazing how
The bottom
how
line is
little
zero.
how little that some people report in income, because they write everything off. And
Yeah.
if you want to do that, hey, I guess it's a free country. I guess you can do that if you want, but you're not going to get bank financing. I mean, if you choose to write off everything and pay as little in taxes as you can, you're not going to be able to get bank financing like you used to.
It's a double-edged sword.
It really is.
It's interesting. You also were talking about like the kinds of loans. A lot of times banks can't wrap their arms around mixed use.
Right, mixed use.
Mixed use is really good.
Yes, yeah.
Yeah,
they
commercial
it
downstairs
doesn't-
and
it doesn't-
apartment upstairs,
It
for
doesn't
example.
fit their profile. They don't see it between page 1 and 2. So
Yeah.
They don't know what to
So
do
it
with
doesn't
they
exist.
say- yes.
Situation of bad news is good news, meaning that
For somebody.
But what I
Yes.
mean is that the bad news. People say, well, gosh, what's the risk of investing in a hard money loan? Well, the bad news is that the borrower may not pay, but then based on your LTV,
It's also
it's
good news.
good news. You can
Yeah.
actually foreclose and actually make a lot more money if
That's
they don't
true.
pay.
Is your LTV still staying where it was, or is it inching up?
Well, we
because of
used
the
to,
demand,
our
or-
max for the Bay Area for most hard money lenders up until recently had been 65%. And now it's 70 and sometimes 75%. So now that the market's stabilized, I've seen, in order to keep up with demand, borrowers are expecting higher percentages, and many of my investors are comfortable going up a little bit. But again, I don't know that I'm going to be doing 80% loans 6 months from now. I don't know that I
it
will,
all
but,
it all depends on the borrower in that case.
It does. It does. I mean,
the market.
everything. Yeah, it always depends. There's
Okay.
variables.
We're going to cut to another commercial break. When we come back, we got an email for Robert that you're going to want to listen to because it has to do with the election and refinancing.
Oh, yeah,
So
let's.
here is our. Actually, before we cut to that commercial break, we have another little special trivia contest here.
Oh.
Now, we're cutting to the second commercial break. Here's the trivia question. Again, the theme has to do with Halloween and scary movies. What was the name of the movie where Linda Blair plays a possessed girl whose head turns completely around? And we will be right back. Welcome back to the Best of Investing. I'm Edward Brown, your host, along with my famous co-hosts, Mark Hahn of Pacific Private Money and Robert Schiff of RPM Mortgage. And when we get to the second commercial break, we asked this trivia question. What's the scary movie, because that's the theme, we just finished Halloween here. What's the name of the movie where Linda Blair plays a possessed girl whose head turns completely around. Gentlemen?
Somehow I don't think that was a difficult one.
The Exorcist.
Exorcist.
The
of
Exorcist,
course.
yes. Very scary pea soup movie. Okay, and we're going to get in.
Yes.
Isn't that what happens? That's what comes out of your mouth? Okay.
Yeah.
Robert, the email we received for you is, did I make a mistake by waiting so close to the election to refinance?
Oh, that's a good question, and now that it's on us, or depending on when you see the program, it's already gone. The markets don't like uncertainty, and since this election is so close, everyone is thinking about, well, we don't know what the economy is going to do, and if the Republicans win, maybe it'll go this way, or if the Democrats win, maybe it'll go this way, and of course, how you feel about that depends partially on your political leanings, but generally the markets like stability and they don't like uncertainty. So probably once the election's over and we know what or who is going to be in charge.
Not
or
what is in the office, but who's in the office.
Yeah, try
that's
to
right,
be
go
in
ahead.
charge for the next 4 years.
Yeah.
Then there'll be talk about really what the programs are going to be or the likelihood are. And the bottom line is that the other people I hear from, the economy is not going to change drastically one way or the other.
Do you think that the rates could stay the same or go down again regardless of who's elected, just because of the stability issue?
Just because of the fact that the economy is not catching hold and marching forward like people would like it to be, and the government is trying to stimulate it, create jobs. One way they know that they can try to spark the economy is by keeping interest rates low, because every time somebody refinances and lowers their payment, that frees up monthly cash that they didn't have. They probably feel more secure and are able to go out and buy a new car or buy a new iron or remodel their kitchen or at
That's
some
the point.
level spend some money.
Well, it does. I mean, at least from an economic point of view, if you're doing the math, it adds more disposable income, and which then has a multiplier effect as it ripples through the economy.
I was talking to a guy today, and he's just been shy of trying to decide what to do, and it's not a large mortgage, but he'll save $600 a month.
Wow.
It's
Even on a
600
small mortgage?
Yeah.
It's a trickle-down economics, as they call it, right?
So you multiply that by thousands of people refinancing, and that's a lot of money that's entered in. That's like creating a job in its own
And yet
way.
the spread between what the banks are paying and what they're earning probably isn't that much different. So it's
The spread is historically as high as it's ever been, because they're basically
Yeah.
getting the money
For
for near
free.
free, and even
Yeah.
if the interest rates are dipping into the threes or the
3%.
low threes,
Yeah.
it's still
It's
almost
yeah.
3% spread, and historically it was under 2%. So that makes me feel like the interest rates are likely to stay where they are right now for at least a year and a half, 2 years
Well, I think
out.
they
So
said
don't
that
feel
they-
sorry for the
2000
banks, right?
Yeah, exactly. Yeah, I don't think anybody ever feels sorry for the banks. I think, didn't they say they weren't even going to touch interest rates till 2014? at
Yeah,
least?
and the
They keep
guys,
extending
the,
it, yeah.
the guys that said it may not be in Treasury after January the 1st. So.
Well, that's true.
Well, that'll be
So-
interesting. And speaking of the election, Mark, you were going to make some comments about that? The economy?
Well, I just thought, obviously it's a good time to talk about it now, as we're looking at Tuesday, Election Day. But what I found interesting is I'm just reading the articles this week, and, all of the pundits pretty much they don't know who to pick. I mean, I've never seen it so tight. It's literally neck and neck. Every poll out there is like 48-48 or 47-47. So
I'm
it's pretty
trying to
amazing.
remember when Bush ran against Gore and it ended up being counting Chads. Before the election, did everybody think it was this tight? I think even then they didn't.
I don't
they
think it
didn't
was
know
as
that-
tight as it appears to be now. And of course, polls have been known to be wrong, but it's
Well-
certainly, I think this is the tightest polling we may have seen in modern
It
elections.
certainly tends to keep people watching the show, doesn't it?
Well, they're already
Stay
talking about-
tuned. We don't
Yeah.
know who's going to win.
I'll just be
those-
glad when all the commercials are gone.
For those of us who read the Drudge Report, and of course, those that do probably are aware that, it tends to lean slightly to the right. But they did have an article that they had highlighted about a number of people predicting there might be a recount if it if the voting turns out as tight as the polls are showing,
Well, they probably would all automatically have a
Oh, I've
recount.
read articles where
Automatically.
they're saying on one side or the other that there's going to be a minimum of 5 Floridas out of this election.
well, speaking of, vote counting, I mean, what about, the districts on the East Coast that have gotten hammered by the storm? How is the storm going to affect the
That's what I
vote
was
counting?
thinking.
Wait. What storm?
A storm?
I know us here on the left coast, it's like, it's warm outside, it feels like 80 in the sun, and it's,
Oh, Sandy.
Sandy
yeah.
Beach.
Yeah. Actually, I'm not that insensitive.
No,
I've been
no.
watching.
Well, I was thinking, that those people that had all those prearranged ballots ready to stuff the ballot boxes in the basement, they're all mildewed now and they can't use them.
Okay.
so any predictions?
Yeah, I was just going to say that. I was going to ask if Romney gets in, what do you think is going to happen to the economy? And if the other guy gets in, what do you think is going to happen to the economy?
Well, I'm a small business owner, and I have tended to vote Republican most of my career. Although I will admit I did vote for Obama on
Interesting.
this previous election, because I just I kind of felt like maybe I was ready for a change, and McCain just didn't seem
No,
to me to be.
well, that's why I voted for
Even with
Alan
the
Keyes.
strength of his vice presidential candidate.
Yeah, you're right.
Yeah,
Notwithstanding,
exactly.
yeah, right.
Well, that's why I
But
voted
I-
for Alan Keyes last time,
Mm-hmm.
because he was totally this independent person who I really thought I thought he'd be a great president. But unfortunately, not being Republican or Democrat, it's really hard to get elected.
Yeah.
And I think a lot of people
Yeah.
look at the I don't want to waste my vote type of thing,
Right.
but nothing ever changes if everyone thinks that way.
Right. So
That's
this
true.
time around, I'm not inclined, I don't think, to vote again for the president, because I am afraid of the so-called fiscal cliff, and quite frankly, I'm tired of paying. I mean, I already pay too much in taxes, and I'm sorry to say that, but that's the way I feel. I mean, we live in the Bay Area, and we have a high cost of living, so we have to earn quite a bit more than the average American in order to have a middle-class lifestyle here. And I pay through the nose in taxes, and I don't like the idea of my taxes skyrocketing.
Oh, and it's not
And I
just
don't think
federal.
it's paying taxes. I think that so many people feel like, I'm willing to, I'm required to pay income tax and I'm willing to do it, but how it's used and where it goes and who
That's, yeah.
decides where it goes is not to any of our benefit. And there's a real
Well, and it's not just
cynicism.
federal. Remember, you've got state,
Oh, the state. Oh,
sales
yeah, of course.
tax, and
Some of the
gas
cities in the
tax.
Bay
There's so
Area, I
many.
think Berkeley has a 3 or 5% tax on real estate transactions. It's
Yeah,
enormous.
The city of
it's-
Oakland
it's-
does.
San Rafael
Yeah.
has
Alameda
San
County,
Rafael
yeah.
has a so
Yeah,
it's,
because really, in fact, if you sell property in Berkeley, generally you split the county tax because it is so, or the city tax because it is
It's
so
3%,
high.
enormous,
yeah.
yeah.
It's really, really expensive. And then, in real estate tax, I mean, I wouldn't be surprised if we pay over 50% in tax when you look at every single thing that we do. That's
So
kind of crazy.
Right, and so
That's why our
break
infrastructure
it
is so
down.
strong.
That's why what?
Our infrastructure is so strong.
Not.
Yeah. Well, they did just pave the road out here not too long
Oh,
ago,
that's
so
true.
I like that. Okay, we're going to cut to a quick commercial break here, and our third trivia question is, what's the name of the movie starring Jack Nicholson where he says, "Here's Johnny"? And we will be right back. Well, welcome back to the Best of Investing. You know me, Edward Brown, and I'm the host. And I'm here with
With
Mark,
the most.
with host with the most, and we got Mark Hanf of Pacific Private Money, my
Indeed.
co-host, and also Robert Schiff of RPM Mortgage. I said shift, but it's actually Schiff.
It is shift.
Okay. When we cut to the third commercial break, we asked this trivia question: what's the name of the scary movie starring Jack Nicholson where he says, "Here's Johnny"?
And he says it to Shelley Long,
That's
Popeye's wife.
Popeyes. Yeah, not Shelley Long. Duvall.
Shelley Duvall.
Yeah,
That's right.
That's right. Yeah, she was in that.
The Shining.
The Shining. That's right. That was kind of cool.
Stephen King's novel. The
Yeah, every time now I go into one of those Halloween cornfields, I always have to make sure that I can jump high enough to look around because you can get lost in that stuff.
Yeah.
And good thing it doesn't snow out here, or else we'd be just like that movie. Pretty scary.
Has anybody checked the polls out? How are we doing on these tax increases that, as Californians, we're supposed to be voting for so Governor Brown doesn't shut down the schools?
I always vote no on taxes.
Well,
Do you?
Yeah.
I pretty much do too. Bonds, taxes, you name it. I
Because
just
they always
know
say,
across
"Oh,
the-
it's gonna. Oh, this tax will only be for like 3 years." Well, no.
Yeah, and the
then
money will be just for schools. The one that Brown's has is just for schools, and it's going to be so guarded that the state government's going to hold on to it and use it just
They're
for
gonna put it in
schools
a lockbox, right?
or anything else they might want to.
Yeah,
And the
yeah,
other
yeah,
one that
yeah.
the opposition says is just for schools, and so usually when there's two opposing amendments or that are going for the same thing, they both lose.
Oh, that's good.
Yeah, so that would be a no on both of them.
Well, especially like when they do like sales tax, you know, and they say, "Oh, just vote for this for like 5 years." Well, what happens after 5 years?
Right.
Did they ever lower it?
Right.
Very
No,
rare.
the 5 years means we probably won't have an increase to that within the next 5 years.
Yeah,
Yes.
exactly. We'll just look at it. And
But
just keep
talked about time, and when those 5 years are up, we're heading to that right at the end of the year when all the tax cuts and tax increases and everything's going out the window unless Congress can find a way to get themselves together and act in a way that they haven't. And
Well, let me ask you guys about the prop. Was it, I think it's 37. Is that the one with about the genetically modified food?
oh,
You know, at first I'm thinking, okay, now how could anyone be against this? And then you start kind of hearing some ads, and then you hear the counter ads to those ads, and I'm trying to think of, okay, realistically, is it gonna cost, you know, umpteen gazillion dollars if we change, you know?
I was listening to radio yesterday, and they were questioning, where's the $400? How is it going to cost $400
Yeah,
per
exactly.
citizen? And well, they're going to have to rewrite the label, and they're going to have an advertising executive come in and decide how the label is going to be changed. And for each product, that could be very expensive. So
Really?
it didn't sound, and it was $400 possibly over the next 10 years.
Yeah, I was gonna say it can't be that much to change the
No.
labels, and then also there's exceptions, right? There's certain ones that are except, you know, certain products don't have to
Yes, it was
put the label.
something meaningful like beef and not pork, or soy milk but not regular milk, or
Yeah, I don't know. I'm so skeptical about this whole, you know, the whole proposition voting the way it's gotten in the last 10 years. You know, it's on the one hand they say, well, you know, we have to because our folks and our elected officials in Sacramento won't do anything. So, you know, the citizens have to rise up and pass the laws that are needed to protect ourselves and blah, blah, blah. But on the other hand, how many more laws do we need, really? And I just tend to vote no on everything unless it's just so compelling and so obvious as to why this is necessary, because in Sacramento they're, you know, either through gridlock or whatever inaction can't seem to get this very important piece of legislation passed. But you know, that and the whole thing about, you know, voting to increase my taxes. And again, it's, like I was talking in the last segment,
Just
you know,
yours.
living in, right, well, you know, those of us who live in the Bay Area and live in expensive communities where everything, you know, housing and, you know, every component of our lives cost more than just about anywhere else in the country, and even anywhere else in other parts of California. And so,
Yep.
so I don't know. I don't, you know, I don't consider myself wealthy, and yet, you know, to vote for these propositions and to vote myself a tax increase because Governor Brown has decided that, you know, the amount of money that I report on my taxes makes me wealthy.
All the governments, federal, state, and local, California, and probably most places in the country are running at deficits, and unlike the government, we can't print California dollars or San
Well,
Rafael dollars or San Francisco dollars. to pay
San
off
Rafael
the-
dollars.
Well, someday they'll just go ahead and
Maybe
make
that-
the 100. It'll be 100% tax rate, and the government will just dole out what they think you need.
Well,
Okay, now what about the death penalty? Now I've usually voted to keep the death penalty, but when you look at how it's done, I'm looking at it and going, you know what? If you
There
keep
is no
this-
death penalty
no,
effectively in
and it
California.
gets too expensive. So this is going to be I
You
think, the first
automatically
time,
have 25 years
something like that
minimum
of appeals. I
of
know
appeals.
it's
So
way too expensive.
It's
so it's
certainly
too, might
not,
as well just get rid of it.
it's not working as the detriment, and if it's not going to be a
Oh,
detriment
it's
to-
only a detriment to the guy who actually gets killed. He promises never to do it again.
to die again.
Yeah. But other than that, though, unless you're going to change the death penalty where it's going to be like really swift, like let's
That's
say
like
within
what they
6
do in
months.
China. You're found guilty, the death penalty, they march you outside and before the jury.
Wait, we made a mistake. Up, too late.
Yeah, yeah.
Yeah, but it's one thing to do
Those
it-
things will happen.
Yeah,
I'm sorry.
those-
Yeah, but
those
20
things
years.
will happen.
20 years. Yeah. Now that one I may vote for to abolish the
Yeah,
death penalty.
I think that's
because
the one
that
I'm
could
going
be
to also.
a cost savings to
Yeah,
government.
exactly.
And
That's
since
all
it's
I'm
not
looking
a
at it.
deterrent,
I mean, it's not like saying that the guy's going to get out of jail the next day. He'll get life in prison, and
Right.
now if they do, without possibility of parole.
What's weird, if you get life in prison and you're not with the death penalty, for some reason, it's less expensive to house that prisoner than it is if they're on death row.
Which I just don't understand. I mean, if you put someone in, I guess it's the
I think
cruel and
it's-
unusual punishment where
I think it's where they house them, how they house them, and the access to attorneys that they're entitled
Yeah.
to.
you can't just put them in a big cage and drop food from the helicopter.
There was a guy that tried to commit suicide the day before his execution, and they caught him in time and
Oh, good
took
thing.
him a few weeks to get him healthy enough that they could then execute him.
Well, it's the
You know,
same
that-
thing. Why don't
that
they
doesn't
sterilize the
quite make
needles when
sense.
they,
Yeah.
they sterilize the needles just before they give them, the injection for killing them? I don't understand. Is Devil's Island still around?
That's a good idea.
Reopen Alcatraz.
Well, see, the problem though is it's too expensive to keep shipping food and electricity and all that other
And they
stuff.
say also that's why San Quentin will probably stay in prison, because they don't want to put it somewhere where the land's cheaper because it's way far away.
If they go
hours
to bars
away.
though, then they'd have to hire new prison guards
Yes.
for all those
What do you
guys
think
have
they
to
build at San Quentin if they release that to developers?
Oh gosh,
Oh,
I mean, it'd be
my
great
God,
for
it'd be
housing.
Housing,
Yeah. I mean, it's not like a cemetery where there'd be all this real weird stuff. I mean, I guess maybe
Yeah, but
because
you have
people
to
do
tear
get
everything down,
executed.
and then it's just kind of like this big,
Beautiful
open-
waterfront property.
Well, it's waterfront property, but it's dirt.
I'm so poor that if thieves ever broke into my house and searched for money, I just laugh at them and search with them. Thanks for listening. On behalf of our team.
Put your clocks back.
Oh, that's right. Don't forget, put your clocks back so
All
you get to
back.
sleep an extra
Sleep.
hour.
Yep.
Do that midnight tonight, that sort of thing. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long.